The Kraft Heinz, most traders read this chart wrong. One level decides it, trust or trap, not investment advice. The Kraft Heinz daily chart. It already swung up 24.9% inside this window, and most people are reading it wrong. So is this a move you can trust or a trap? One level decides it, and it is already on this chart. This window has a high and a low. One number between them matters more than both. The Kraft Heinz opened this window around 22.49. From there, it rallied up 24.9% to the high near 28.09. Then a pullback carved out the low near 22.01. And here is that number. It is holding 60% of that range. Buyers still own the upper half. But charts do not move on their own. Look at what just happened here. This is not a random candle. Something changed underneath. It just cleared its 60-day high. That is a structural change. How unusual. Put it next to the S&P. Same window, side by side. The S&P did up 7.6%. The Kraft Heinz did up 14.1%. That is a 6.5-point gap. Strength against the benchmark is information. Now the structure underneath. Zoom out first. The weekly decides whether any of this matters. On the weekly, the higher time frame is down. Zooming into the daily, the 6-month trend is sideways. Down on the 7-day chart, higher highs and higher lows, stacking up the chart. So the bigger trend is down, but price is bouncing. This is a recovery attempt. Direction we have, now the levels that actually matter. Here is the catch. There is no clean impulse to retrace. This is a range, so Fibonacci would just be lines floating in the noise. The levels that actually matter are the edges of the range. Resistance on top, support underneath. A close beyond either one is what actually decides it. We know where, but is there fuel, momentum? The RSI on the daily candles. It sits near 50, in neutral territory mid-range. Plenty of fuel left in either direction. The slope matters. Falling RSI confirms sellers. 50 is the line between up and down. One gauge can fool you, second opinion. That is where the MACD comes in. The histogram is negative. Falling red bars mean momentum is bleeding out. When both agree, the signal is stronger. Every piece is on the table, so how does this actually play out? 3 ways this resolves. Bull case, it holds this base and grinds back up. The old highs are too far away to call a level. Base case, it chops inside the range while the market makes up its mind. Bear case, it loses 22.01. Below that, the setup is invalid, no excuses. Which one is it? Back to the question. So trust or trap? Over the past 3 months, the Kraft Heinz closed up 14.1%. The signals are split half strength, half trap. A wait and watch, not a chase. That is the read. Drop a coin for the next one. That is the week. A fresh board and a new name on top are coming. Subscribe so you do not miss which one.